Ciao, welcome back for another episode while we are live at BlackHat. I'm very excited for this one. It's been a little while in the making, but I am joined here by the team at Acrew Capital. Very well established and arguably, whether I'm biased or not, a fantastic VC firm that really do a lot of great work in the cybersecurity world. So I have Mark and Asad here with me. Why don't you both introduce yourself? Go on. Why don't we kickstart, Asad? Give us a little introduction to who you are.
My name's Asad. I'm one of the partners, co-founders at Acrew. Cybersecurity and data is one of our largest areas of investment. And we're amidst the BlackHat craziness. So I'm excited to get into it with you.
Awesome. Go on, Mark. Take it
Mark.
away.
My background before I was a VC was in an executive at cyber companies. Longest stint was in Perva for a long time. I like to say after that, I either saw the light or turned to the dark side and became a full-time investor. So here we are.
Absolutely love it. Got to put a little Star Wars reference in there. So I mean, obviously we're at BlackHat, very famous cybersecurity conference. You're here for a reason. Clearly, there's things that you're out looking for in the market, things that you want to see while you're here. Why don't we kickstart? What is it? What is it that you're looking for? What are you excited to see? What's going to be on the ground floor that's going to get you feeling all giddy?
Well, a bunch of stuff. I'm happy to start. I think there's a couple of areas. Maybe we can each take a couple in turn. So maybe taking a step back, one of the ways we think about security investing is there are certain estates, domains, whatever you want to call them, in security. So you might have communication, you might have your network/cloud security, you might have endpoint. And historically, new companies, whether it's because of threat actor innovation or because of technological shifts, build new versions of product software companies within those estates. And for a long time, it's been kind of the same old group of estates. There's a question of does AI become, for instance, an independent estate? Is there elements of that in each? One that we're really excited about is human, and we think that could be a potential new estate in security. And the way that we think about it is, if you look at, from a business perspective, a lot of the biggest attacks are ultimately still social engineering attacks. And so it comes down to how do you secure human behavior. For a long time, the best in class way to do that was training. And our view is, if you're not in a security job, security is not your job. And so we have to come up with a better way to secure the environment around you. There are several companies that we've met that are working on being more of a sort of assistive training platform, so sitting with the user and helping them take actions that are inherently more secure, maybe not doing things that might be insecure. The other big vector, of course, is natural language. So it's so much easier. I'm sure everyone's heard about fakes with voice. You've got natural language text that could be machine generated that you might think is coming from someone else. And so the ability of threat actors to scale attacks to efficiently attack with high velocity has changed. And so we think there's something new that is needed. The good thing is the defenders have the same tools. So LLMs, for instance, are really good at looking at a conversation and saying, hey, is there something odd going on here that we should maybe think about escalating or stopping? And that just wasn't the case even a few years ago. And so we think human security is potentially, for the enterprise, a new category. We haven't yet announced that we have made one investment there, but we think there's a lot more to come, and so we're actively looking in that category. There's also maybe a less enterprise and more consumer piece of that around protection against scams that we can talk more about. But I'll start there. I don't know what you would say.
Yeah, well, I would agree with all that. I'm going to take it a little different direction. One of the big pieces of news coming into the week was Palo Alto buying CyberArk.
Yeah.
Which I actually am very excited about. We don't have any position in CyberArk, so we don't have any financial interest there. But I think that is going to open up the doors for a lot of opportunity for startups, because I think it's a big acquisition, and that usually takes some time and creates some distraction. And I actually honestly kind of think CyberArk was a little bit ripe for disruption to begin with. They've been a very successful company over the years, but they're kind of operating from the last generation of tech. Really on both sides of the business, the PAM side of the business, and they have a machine identity company that they bought called Verifin, I think. I'm not sure if I have that. No, Venafi. I always get those two mixed up. They're very close, a lot of the same letters. And I think what that will mean is that there's a chance they take their eye off the ball, and then somebody with a more AI native or more modern approach has a lot of opportunity. So I think it's probably pretty good for kind of the innovation side of the industry.
Yeah. No, really interesting to hear. And obviously, you kind of both briefly touched base on it, but the one thing at RSA in particular that was a hot topic was like non-human identity.
Yeah.
But you're talking about the fact of the human side as well. Everybody often really forgets the fact that humans are obviously one of the largest reasons for any form of data breach or whatever it may be. And sometimes that's not always necessarily the top priority when they're kind of looking at, it's often, how do we put out fires instead of prevent them kind of attitude. So it sounds like there's definitely opportunity there, especially with the way that the market evolves and stuff like that. I mean, let's say kind of, there's businesses that are sat here and they're listening in and they're going, yeah, but I'm ticking that box. Like you've just said you really like something. That is me. That's who I am. Kind of what's the process? What do you look for then? So, okay, product market fit, great. Okay, you've got great product. What else? Is it just ARR? Is it the team? Like, what are the key factors that are going to help define that?
So for the earliest stages, I have 3 things I look for in a founding team, and that could be in one person, but a lot of times it's more than one person. I think you really need somebody who knows the domain that they're going after, like an expert, somebody who can go sell the first customers, and somebody who has built a software product before and delivered it to a market. And that's probably the one that a lot of people trip up on. There are a lot of experts who've been maybe on the user side, like a CISO or a consultant, and they know a ton about it, but it's a little bit different to kind of do the work than to build a product that somebody else is going to use to do the work. And in order to build really big businesses, you tend to have a scalable model on software. So I look for those 3 things. Sometimes there's one person, they have it all, or they can bring some people to round them out. But those are the first 3 things I look for at the earliest stage. And then as you get further, you start to look for things like product market fit and whatnot. I think having humility and listen to the market is really important. Maybe not at the very first. I think you have to know what's coming, especially with the pace of change today. And that's good. You have a point of view and build something that you think people are going to need. Then maybe you do know better before the market knows. But at some point, when you start to really have friction with the market, you have to put your humble hat on, I guess, and start listening to what customers want, and that'll take you a long way.
And as you can see, Mark has strong opinions on this, so I'm going to go second. But I guess I'll add 2 things, which is one, I do think Mark touched on this, but it's a time of very rapid change, and that means no one has the answers. We think, there's things that we're still waiting for legibility on, and we'll find out over the next few years the answers to various questions that I'm sure people can guess. But one of the things I think that's especially important right now is velocity, adaptability, just making sure that you're moving with the market, because the metabolism of the market is so much faster than it used to be. And that's everything, right? The pace of innovation, the pace of technological change, the pace of threat actor innovation, the waves and generations of startups that are just faster and faster and more compressed. And so as a team, you have to be able to respond to that. You got to balance that with focus, of course, but you have to be able to respond to that and live in those waters. And that can come up in small ways. It's funny, a few years ago, earliest stages in security, we would never see products. We would see ideas, right? We talk about decks. And now you could go and there's 2 people and they could present a piece of software to you that they built over the past few weeks. So making sure you're leaning into and have the ability to be adaptable and are taking advantage of everything that's on the table is really important. The second thing I'll say, which is, we sit on this side of the table, it's our job to look at and hopefully, evaluate reasonably the opportunities in front of us. But I would just say it's important to acknowledge it's a mutual process. You're meeting investors, you want to make sure if you're raising at the earliest stages, that's a multi-year relationship. And you're going to meet, 4, 5, however many times before you get married, basically. And then you're making a long-term commitment. It's a mutual commitment, and I think it's important that you feel that the investors you are choosing share your vision, share your values. We look for the same things, and it's you're not just trying to tick boxes on behalf of the investors. You're making sure that you think they're the right fit for you, and often that can mean that they think you're the right fit for them. And so there's a nice sort of circularity to that. And I guess I would just emphasize it's a mutual process, and especially as a first-time founder, it can be intimidating. You could assume maybe that the other side knows more than you, but you got to keep it in mind that it's a mutual process.
Yeah, for sure. I think you hit on some really valuable points there, but definitely what you're closing out on, because I think people really often underestimate actually how much the involvement or the synergy is going to impact the growth of your business. So, okay, it's all great, buzzing, you've secured your Series A rounds and you've got a nice bit of cash in the bank account, you know, you've had that check come through. The reality is that the journey doesn't end there. It's exactly as you say, it continues. And this is why it's so important to make sure you're hitting the right criteria with the right partner. Because I suppose everybody's probably shifts slightly, but ultimately, you know, the value add piece there is, okay, there's a reason that you're picking the businesses that you're going to invest in. You know, it's like you say, Mark, there's other things that you're looking at just outside of product market fit. That might be something that's coming further down the line. It's, okay, are we really hitting the right ballpark here? Are you adding the right value? But I suppose let's look at it from the perspective of, okay, great. So the first question's being ticked. Right, we've got the right products that you're interested in. Awesome. Okay, we've now hit the criteria that you've talked about, and we've secured that first round. We've got some cash. But then what comes next? Because those next steps, and I think especially when we talk about first-time founders, they haven't necessarily been through that journey. Or if they have been through that journey but working for a business that's done it before, maybe they haven't been the one driving the ship, and they don't know the influence that's going to be impacted. So what does that look like? What does it look like once the cash is in the bank? You know, what are the next steps? What's the expectation here for a real partnership? And how can you make sure that that scale is successful? Because ultimately, the next goal is, how do I get to Series B?
Well, I think a lot depends on the market you're in. One of the things that I think the pace of change has resulted in is it's really difficult to really wait for all the market signals. So one of the things I would usually tell founders, and I still fundamentally believe this, but the way you do it I think has changed a bit, is you don't want to spend ahead of where you are. So like, let's say you have a product, but you haven't proven out that you've got enough fit to really sell it, and you bring on 5 salespeople. You're probably going to burn all those people out. They're all going to leave. And you might not get another chance at it. And that might even be true for just one salesperson before you have product market fit. That's why when we look for founding teams, we want someone on that team to be able to go to the first customers, because they shouldn't spend on a sales team or marketing before you have confidence in what you're marketing to. I've actually seen a bunch of, especially first-time founders, one of their first hires is a growth marketer, because they're like, all right, we got to go talk to people, we got to get them in the door. And a good growth marketer is going to bring people for you to talk to. But if they're the wrong people, not only have you like spent money to go find them, but you're burning a lot of organizational sort of attention by talking to them, because if they're the wrong people, they're not going to buy. And you can burn through a lot of capital and sort of like human capital in that way. So the first thing I want a founder to do is like get the product in the hands of customers. So build the product, get it in the hand of potential customers, and really sort of get an idea of what else do you need to build, if that's the answer, or see the signals that you've got something you can sell, and don't spend that money on anything go-to-market related until you are confident in what you're spending in. Depending on the pace of the market, that might be very fast. And then the other problem there is that I think you do have to build in front of a bunch of markets these days. A lot of the markets hit an inflection point very quickly. And if you don't have a product at that point, you're going to miss it. So you have to probably build ahead of the market. But in terms of go-to-market and selling and marketing, you want to really take signal from the market before you put resources into it. And it's a really tempting thing to do that mistake I said. Bring somebody who's going to get you in front of more people and spend money on that, because it feels like you have a lot of activity in that sense. But ideally, you can do that without having to spend money. You can do it very efficiently. And then when you're ready, you can put your foot on the gas.
Yeah. I think there can be various manifestations of that broad pattern too. I think one of the things Mark said that's really important is you have to understand sort of what set of inputs. Like ultimately you're building an early stage business, you're building a box and that box gets kind of clearer and less blurry as time goes on, and you start to understand, if I put this in, what comes out. So there's this input output thing that's really important. And I think at the early stage it's hard to know what comes out. And just because you raise capital doesn't mean that magically the wires hit and all of a sudden you have legibility and understanding of exactly how the thing should work. And so I think one thing to keep in mind is it's a gradual process. I think ideally your investors understand that. I think one version is maybe hiring in a way that implies kind of more maturity and legibility than the business is ready for. But that extends to everything, right? Investor relationships. Oh, look, I've got investors now. Like I got to tell them, something every quarter. And it should be like this. But the reality is it probably isn't, because you're still in an early phase of the business, you're still experimenting, you're still learning, and the most important thing is to keep your focus and to make sure that whatever you do gives you more information as to, okay, if I put an X, Y comes out. And the more you can do that, the clearer it gets. And then, as Mark said, it's very stage specific. So Series A, B, C might be very different. But at the earliest stages, I think a lot of it comes down to that.
Yeah, the other thing that makes me think about, a lot of founders feel like they need to really manage like me and like give me the positive news.
That's kind of neat.
And that's whatever, that's probably true, but it doesn't work that well. The best founders are the ones who will come with like the full picture. If I ask a question, they'll answer it, but then they'll also tell me what I should have asked. And a lot of times that's not a super positive thing. It's like, I'm having trouble with this bit. And the thing is, this is also why we want to, we want to spend more time with the founders before we invest, so they feel comfortable that they're working with somebody that they can share that harder thing with. And then that's how I can actually help.
Yeah.
Right? So maybe I've seen this before. Oh, like you just need to do it this way, or I can find somebody who can help you figure that out. But if we don't have a way to have that out in the open, you're not going to get that help. And if you're just managing to like make everything look positive, that actually might feel good, but eventually you're going to hit a blind spot that you don't know how to navigate, especially if you're a first-time founder. Yeah. So for me, that relationship with a founder, like one of the like personality traits I really look for is transparency, and being able to like really talk about the real things, because every startup goes through ups and downs. And the way we think about it from our role in that, we have this thing we call the green light test, which is we want the founder, when they see us call them, whether it's in a good time or a harder time, they see us calling, they're going to answer the phone. Yeah. And they feel good about it. And we try to really live up to that, so that they can always come to us and we can help them. And if we don't know, we can't help.
Yeah. I think, I don't know whether this is just going to be a really weird analogy or not, but, kind of like the way that you describe that there is almost like if you have a really great teacher who has like a really great insight of what you need to do, how you can pass your exams, and that's going to lead you to success to that next stage you want to get to. If you don't feel comfortable going, I don't know the answer to this question, then you're not going to learn the answer, or it might take you longer to get there. And I think what you're talking about there is really critical to how important that synergy is, because I think it's so easy to forget that it's truly a partnership, like it's a mutual beneficial partnership. A company does well after you've invested in them, that benefits you guys, it benefits them. That's ultimately the end goal for everybody. I think it can be really intimidating sometimes when you're like, I don't know the answer, to think that that's the wrong thing to say, when actually the best way to get that is to just admit. And I think that's something that people probably shy away from a lot of the time, because it can be that's a daunting thing, especially when you just, I don't know, it's like wanting to make your parent proud, isn't it? It's like you kind of just want to be able to turn around and be like, look, I've done a really great job, be proud of me, I'm perfect. Nobody's perfect, and especially in the startup world, it's a roller coaster and everybody knows that. I mean, we've covered some really great things here today. I mean, are there any last tidbits of advice that you would say for anybody tuning in that we haven't covered? Anything that you would say, take this. If you're going to take anything, take this.
Yeah, I think one of the things I see a lot of founders do is they try to build a business that VCs will want to back. And sometimes that makes them do very unnatural things. One of the examples is some businesses are not product businesses, they're services businesses. And that puts you in a tough spot, because you want to raise venture capital, you want to build something big, but really what the market wants is a service, not a product. And I think the thing to do there is, instead of try to like make it into a product in an unnatural way, which usually doesn't work very well, build a services business and maybe find a different source of capital, but you'll be a lot more successful in that scenario. And I think the reason why people do that a lot of times is they're building for the investor, but they should be building for the market.
Yeah. And
so I think as long as you pay attention to the market and you're in a space that's interesting, the business models might be a little different, but build for the market, not for the investor. We should be helping you build for the market, not having you build for us. That's our part of it.
Sure. Yeah, Spitfire.
Well, Mark's the wise one, so I don't have that much to add. No, I mean, I would say a version of that. I think especially right now, we're in a period of time when, we're going to have books and movies, and the movies will be AI generated too, in 10 years, about the time we're living through right now. And it is a time of great change. It's also a time of confusion, a lot of noise, some signal, a lot of noise. And so I think it's more important than ever for founders, to some degree, you got to keep your finger on the pulse of the zeitgeist and what people are talking about, what people are interested in. But you have investors who are noisy and who are trying to create consensus and legibility where it might not exist yet, and where there are no answers, going back to your analogy. And so I think as a founder, just for your own peace of mind and quality of thinking, I think it's important to figure out ways to get that, to, be at BlackHat and like soak it in and get a sense of what people are thinking about, but also to then, go away into your thinking, have your focus, and spend time on what you think needs to exist. And that quality is usually, it comes from you and your team and the people around you, and it won't be at BlackHat. You can show it off at BlackHat, but it won't be here. And I think getting that balance right is really important, and it can be hard because it's a noisy world. But you gotta keep that in mind.
Absolutely. I think that's something that people often talk about, how noisy this space is. Like, how do you stand out from the crowd and all this and all that? But I think you've hit some great touch points, and I think one of the most important things to really come out of this is it's really that collaboration piece. It's about finding the right partner. So for anybody that's tuned in, and I mean, I've already done this, but they've ticked the boxes on those first few questions, and they're sat here and they're thinking, wow, okay, all right, I like these two. These are like, I really want to be able to get connected. I want to have a conversation. Let's see if this synergy is one-sided or if they're going to feel it too. I mean, what's the best way to get connected with you guys? I mean, how do people reach out? How do they get on your radar?
Yeah, just reach out. Easiest place to find me is on LinkedIn, and my email address is super easy. It's just Mark at Acrew Capital. I have a lot of filters on there, so I don't get to. I will be honest, I don't get to all my emails. But LinkedIn, usually it shows up. Sometimes it takes me a while to get through it. I think the thing that I most want when they do that, send me a little bit more than a few sentences. Like, a lot of people want to hold back the full pitch, but you should have a little bit more description of what the company is doing, and let me filter, because I find that it's sometimes hard to tell like what's really interesting for us, and we want to be respectful of your time, and maybe by extension our time. By we'll look at it. If it's interesting, we'll follow up. If it's not, you're probably better off, going and finding someone else. And it's not necessarily a comment even on what you're doing. Like, we are very specifically focused on a couple of different sectors. And if it's outside of those sectors, we're probably not going to be that interested, and we're actually probably not going to be that helpful for you. Then you should find somebody who's focused on what you're doing.
Awesome.
I'll be more tactical. If you're thinking about the future of human security, you should reach out to us.
There you go. Well, that's your answers. Well, thank you for tuning in, guys. Thank you for being here. I know BlackHat, as everybody knows, is a very busy few days. I mean, how can you not be in the city of Vegas and not be super busy? But hopefully some really helpful tidbits there. Really great. And as mentioned, if you think you're ticking off the boxes for the team, make sure to reach out. Really great crew over there. And yeah, join us for more conversations as we continue this week for things that are shaping cyber.